This is an open meeting and it's televised.
That meeting on TV.
Call the meeting to order. Mr. Clerk.
Thank you, Mr. Chair. The first item is the minutes of this Standing Committee's meeting of Monday, November 16th of 2015, and the recommendations to approve those minutes.
So moved.
Second.
Moved by Councillor Asmussen, seconded by Councillor Zerillo. All in favor? Opposed? Carried unanimously.
Item 2 is minutes of the Finance Standing Committee meeting of Tuesday, November 17th, 2015. Recommendation to approve.
Moved. Second.
Moved by Councillor Hodge, seconded by Councillor Asmussen. All in favor? Carried.
The first item is a verbal report of the General Manager of Financial Services. He will be giving a presentation on business assessment and Taxation 101 workshop.
Yes, ma'am.
This is the presentation. I hope that you will all think what I think about it. I think this would be very good, the first 5 slides that get put into the newspaper and with a further invitation to deal with asset budget time. I think it's just a very, very good presentation. Thank you.
Okay, thank you. Sarah.
Gee, that's good to hear, seeing I haven't even given it yet. I was actually going to ask the mayor to give it, but he's not here, because I don't know if you guys are aware of this, but our mayor published an article about Tax 101, and it's right on.
Property Tax 101.
Yeah, in Input Magazine. And it's actually excellent. I nailed it. It's pretty great. He's also got some summaries at the end that I'll share with you, because not only are they right on, but they're also kind of show a little bit of a sense of humor, which is kind of fun too.
So you helped write it?
Did anybody know about this?
No, I didn't know about that, but I'm very pleased to learn that our mayor knows how our tax system works. That's
excellent. That's excellent. Okay.
You've learned.
So 2 finance meetings in 1 week. That's pretty special. Yeah, you will notice we have a new face again today. This is Rhonda Anderson. You were introduced briefly to her in, I think it was July, but she's now been with us since June, and she's worked through her first tax season with us and done her first tax sale, and so far it's going very well. So we're really pleased to have her here, and presumably sometime in the future it'll be her sitting here giving these kinds of presentations rather than me. So we were asked to give a tax presentation at our last Finance Committee meeting, and so we thought we would put something together for you. And of course, this is a relatively complex mathematical thing, so we thought we'd maybe try and keep it as simple as possible. And to that end, we are going to focus on the taxes of the city, and we're going to sort of ignore the taxes that we collect on behalf of other governments, because we want to focus on our responsibility and what we do. The other thing I should point out is that pretty much all the communities in BC approach taxes almost the same, because we all work under the same legislative framework provided by the province, right? So we kind of need to do this. So the whole process starts with our budget process. So every year, Council determines what is the service level that we need to provide to the community for those services that they expect to receive. They expect to receive police, fire, public works, all those good things. And there's a cost to that. And so we know that we need to collect the taxes to provide for those particular costs that we've approved in terms of service levels. The first thing that we do is we figure out all of those services also come with some kinds of revenues. So we have permit fees, we have admissions to pools. So the first thing we got to do is take all the costs and then subtract from that all the revenue that we are able to bring in directly for services that are provided directly to individuals. And what remains is the amount that we need to cover from taxes. Okay? And to do that, we then allocate that to all the properties in the community once we know what that is. And it's allocated on a very simple basic formula. It's assessed value times tax rate gives us the tax bill. And one of the things that Council will have noticed is we often hear in the community about tax rates. The truth is that the tax rate, and I'm going to show you some slides a little bit later on, isn't the whole picture at all. What matters to a person is how much they have to pay. It's that tax bill, not the rate alone, right? The rate alone is 1/2 of the picture, okay? So to calculate the taxes every year, we go through a sort of a step-by-step process, and the first step in the process is all around assessed value. And that is a particularly important step in years like this year, when we've seen tremendous increases in the assessed values of residential properties. So we know that as assessed values go up, we can reduce the tax rate and collect the same amount of money for that budget to cover the services that we want to deliver. right? So every year, that's the first step in the process. Unfortunately, that's often misunderstood. Both the public and the media seem to misunderstand that if you have a big assessment increase, that necessarily means that the city is going to get windfall revenues or that their tax bills are going to go way up. That's not the case, because the first step is we make sure that we adjust for that to collect the right amount of money. We have absolutely no interest in profiting from assessed value increases. We want to collect the money we need to provide services. That's it. No interest in extra money. Okay? So the second step in the process is then to look at our new assessment. Because every year the community grows a little bit. There's more subdivisions, there's more building, and there's a whole bunch of new assessed value in the community that can sort of mitigate the cost of inflation and all those challenges that we experience in providing that service level that we've chosen to give to the community. Okay? So now we take that newly reduced tax rate, because assessed values have gone up, the tax rate has gone down. We take that newly reduced tax rate and we apply it to all of the new growth in the community, so all of those new properties. And that helps to mitigate the tax increase that any given property owners are going to have to experience. Okay? And so the final step is we have our budget. We adjust our taxes or our tax rate down to make sure we collect the same amount from the existing properties. Then we take off that new assessment that helps to mitigate cost increases, and what's left is a bit of a gap. And that gap is what drives our tax increase. Okay? And so what happens is, as long as your property inflates at the same as the average, you will pay whatever that gap is that's approved by council. So a 1 or a 2% increase is what it normally is.
Quick question on that point.
Yes, Councillor Wilson.
Historically, the increase in assessments on single-family houses are higher than the percentage increase are higher than condos and townhouses, and I think this is where some people wonder. Well, you said it was only going to be 2.4%, but mine has gone up to 3.4%. You know, you lied or you misled us. So, can you clarify the difference between a single-family house and, say, a condo in terms of the impact?
Yep.
Typically.
Currently, prices on single-family houses have increased more than multifamily homes, which will create a situation where, because we adjust to the average, because the information that we have to allocate taxes comes from the assessment authority, all homes are included in one residential class. If we had 2 residential classes, they might inflate in different ways. But right now, we adjust to the average. So if your home increases more than the average, you will see a bigger increase than, say, the 2% approved by council. Conversely, if yours increases less, you will see a smaller increase. And some people, in fact, will see a reduced amount that happens. It just depends on how your home inflates in comparison to the average.
They don't differentiate between.
No distinction.
We don't, because they're all homes. They're all homes. Yeah. So we got a little. Sorry.
On that point too, there's been over time requests by UBCM for the province to have different categories. And what's their problem with creating 2 categories?
To date, that hasn't been done, but I would assume if the pressure continues and if the general inflation rate continues in the way it has, that could be something that the province changes. But that's within the provincial control and not ours. So, but it could happen.
But what's the province's opposition to that? I'm asking.
I'm not sure I'm not sure I know that. Gary, can you answer that one? You know?
Actually,
We need a microphone.
sorry. At this point, we don't know whether the province has any concerns with it or not. It requires legislative change, and in the current legislation, there is only one class for all residential property. That could change at any time, but it would require the legislature to put through a bill to change that. One of the reasons perhaps is we have a very good system, and probably the best system in the world. And situations always arise from year to year. And when you have a good system, you kind of have to have trust and faith in the system and stick to it. You can't react to every situation every year that happens, because that defeats the whole purpose. If this is an ongoing thing, and it may or may not be, because the value increases are different each year. Right now, I understand that the single-family residential are now starting to sort of turn and go down a bit, whereas the strata aren't. So there will be ups and downs on both sides. So I think, and I can't speak for the province, but I expect that they think that in the long run it will even itself out and it will correct. But it would require legislative change to have a separate class.
Thank you. This issue has raised the interest of a couple of other councillors as well, Councillor Marsden and Councillor Reid.
Thank you. This issue did get brought forward as a policy suggestion for UBCM this year, and a couple of us did speak very much in favor of looking at and suggesting to the province that we look at alternative multi levels of residential taxation. That said, the majority in the room voted against that, and so the position of UBCM is not to support multi-level residential. So if the province wishes to do something, which I would encourage them to take a look at, it would certainly be against what the direction from UBC has been to this point.
Thank you. Councillor Reid. Thanks.
As a long-time councillor, I can tell you that if the province pays attention to UBCM, don't get me wrong, but then they take it as consultation. But if they think that that's a good idea, they'll do it. So on the very same vein, I wanted to talk about one of the slides, the comparison within the commercial, light industry, and major industry. Now, because that's it's on page 5 at the bottom.
So we're not there yet.
Wait, did we get there?
Well, it's on the exact same
Okay.
question. That's what triggered it.
Thank you.
All I want to know is, we cannot, and I don't believe we ever have, go between major industry, light industry, and commercial. Can we jiggle those? We're not allowed to because it's different. It's a class within a class, right?
It's a separate class.
So same answer then, no. I'm looking at Gary, yeah.
Gary?
We have the ability to set whatever rate we choose for any one of those classes. We're not restricted. So because residential are subclasses within one class, we have one rate for the entire class. If you're looking at light industry, commercial, and heavy industry, we can set whatever rate we choose for any one of those, and they can be different or the same.
See, I always thought we couldn't, just like the last question. So the reason I'm asking is because we do our 1% push every year, and our commercial rate is way high, and our light industry is lower, and our major industry is even lower. Is there some better way that we could use our 1% push? And that's my question.
Are you suggesting just apply it only to commercial?
Maybe,
and not
maybe
to any
half,
other business
maybe more.
category?
Yeah, that's my question.
Is that a possibility?
It is a possibility. We could only shift for business and not for the other two.
For commercial?
For commercial and not for the other two. If you wanted to, we could take a look at what that would look like. What that would do is if you were only shifting and having a lower tax percent increase for commercial, it would mean that the offsetting hit to residential would be a little bit less. Right?
Or you could give a...
Let's walk through all these examples,
I
though.
had the same question, but I wanted to wait till we got to
Let's
the
walk
slide.
through all these examples, and one of the things that you'll see is that rate alone is not the whole question, and we need to think about that because we get challenged all the time on rate alone, but not on the whole cost of the burden to each business, right? So let's walk through this, and you'll see some exampple.
So that was my question.
Yeah.
Can we take our 1% and reallocate? I'm done. Thank you.
Okay. Now, Councillor Hodge and Mayor Stewart also wish to speak. Do you want to wait until the section goes
I'll
through?
wait for that section.
Mayor Stewart, would you like
I just
to wait?
wanted to clarify for people who are watching, our lowest non-residential rate, tax rate, is commercial. It's not the highest, it's the highest ranking of the neighboring communities, but it's slightly lower than our light industry. So
Yes.
it's much more complex than that.
It is.
And
It's very
look forward to
complicated.
the annual
Hence the keep it simple slide at the beginning.
Thanks very much. Why don't you
Okay.
continue now?
Okay.
Thank you.
So we have a quick example just to illustrate how this works so that everybody understands. And, of course, we've simplified it way beyond. We're assuming that there is only one property in Coquitlam, which of course we know there's more like 45,000. But let's just say the average home is valued at $700,000 in 2015. And in 2015, we had a residential tax rate of approximately $3 per thousand. And so that raised taxes of $2,100. Okay? So let's just say in 2016, we're very frugal and we can still provide the same services for $2,100. We don't need additional money. But let's say the assessment has gone up by 10%. So now that same $700,000 home is worth $770,000. So if we used a tax rate of $3 per thousand, we would collect $2,310 instead of the amount we need of $2,100. So the first step that we do in this whole process is we take each of these tax rates and we reduce them by that same 10% of the assessed value. So now instead of a tax rate of $3 per thousand, we can reduce it down to $2.73, and lo and behold, from that same property, we collect the same $2,100. So it's very simplistic, but that's basically how we do it. So as long as your home changes in line with the average, which most homes do, you're going to see a tax increase that's equal to what council approved. But there's going to be some that are a little bit more because of their location, and there's going to be some that are a little bit less. And over the years, we've seen pockets where, you know, there's a big increase in values, but it seems to move around. And so over time, it averages out and probably works out to be about as fair as you could make it work out. Okay? Now, just to complicate matters, we do this on a class-by-class basis. So there are a number of different property classes within the community, and each of those property classes inflates in a different way. So one year, residential will go way up. Another year, maybe commercial will go up. And we adjust relative to the inflation in that group. Okay, now we're going to show you some comparisons. So this is the slide that May was talking about. So this is a really busy slide, and I apologize for that, but really you only need to look at sort of the bright green lines. But what this shows you is a comparison across the Lower Mainland of all the municipalities and what their tax rates. This is not burden, this is just the rate alone, okay? And so on the far left, we have residential, followed by commercial, light industry, and major industry. And you can see where Coquitlam falls. So generally speaking, we're in the middle. We're a little bit low middle on residential. We're mostly in the middle, a little bit high on light industry. But where we're high is commercial. And that's what's driving us to have a policy around our tax shift. And I think I'm going to show you a little bit later on that I think that's helping us, and it's doing the right thing in terms of the tax burden, not necessarily the rate. Okay? So now this is a comparison to help you understand tax rate versus tax burden. So in the first column, we have all those same municipalities and our rate for residential. And then we have the calculation of the tax bill for an average detached home. Now an average detached home is pretty comparable. It's probably a 3-bedroom, 2-bathroom home on a, reasonable city-sized lot, and you can see that Coquitlam falls right in the middle. But what's also really interesting in this slide is if you look down here, if you look at the tax rate of West Vancouver, it's the lowest. But if you look at the tax bill, it's the highest. Similarly with Vancouver. So challenging on rate alone isn't the whole story, and I think that's the important
Ms.
principle.
McLeod, you began the presentation by saying that you were going to simplify this by only looking at that part of the equation that is attributable to municipal costs, and you were going to take out everything else.
Oh, yeah.
But
we're not talking about it.
Well, it
But it's
seems
in
to
there.
me that this
That's the whole
graph
bill.
here is, and that $5,329
You're right.
is collection for school district,
Yes.
for metro, for what?
Yes,
Okay.
it's the whole bill.
Okay, so
Good point.
I'm paying attention.
I know, that's wonderful. I like that. So this is the same comparison that we've tried to do for business. So what we tried to do here is it's a lot more difficult to find comparable businesses in every community because most businesses, they're a little bit different and you can't really compare them. So what we tried to do to come to a similar kind of example is we looked for a business that operates in multiple communities, and what we ended up picking, because we had the data for, was chevrons with a town pantry, because generally speaking they operate in most communities, they tend to own their own land, they tend to be on an intersection of reasonably busy roads, so they're probably as similar as we could possibly get. So what we did was we went onto the Chevron website, we found a location in each community, then we took that address, we went into the BCAA website, and we got the assessed value, and then we proceeded to do the calculation. And here's what happens, and lo and behold, tax rate alone, again, is not the whole story, because here's Coquitlam's rate, but here's where Coquitlam shakes out in terms of the tax bill for that particular example. Of course, it's going to be different with every different business, but I think the point is that tax rate alone is not the whole story. And again, look at Vancouver and look at their rate. They've got one of the lowest rates, and again, they've got one of the highest bills. Because you can have a much lower rate if you have very high assessed values. But the cost of providing the services in each community is relatively standard. So we might need a higher rate to raise the money to provide the services. And remember, that's really what it's all about. What service level do we want to provide to the community? Okay? So, this shows a little bit of a history for 20 years, I've been tracking this, of our tax rates. So the blue at the bottom is residential, of course it's way less than the business ones. And the green is business or commercial, and the red is industrial. And you can see that over time, generally speaking, the rate is going down. What that means is the changes in assessed value going up are bigger than the tax increases that council's approving. If council was approving tax increases that had more impact, then we would see the rates going up, because every year we have a little bit of an increase, 1%, 2%, 3%, something like that, and it climbs. But actually assessed values are changing those rates way more than any of the decisions that you're actually making. And where you see big decreases, that's where you have big changes in assessed value, right here. Now you can see the same curve here, but of course because the rate's lower, a 25% reduction on a $3 rate is quite different than a 25% reduction on a $15 rate.
Councillor Zarella.
Yeah, so that was I think that's a key point that you just made about the fact that the assessments are really helping us on our tax rates.
Tax rates.
Well, they make the tax rates go down, for sure, but I don't know whether it helps or not, because we collect the same amount of money we need to provide
I guess
the services.
for marketing purposes, for councillors that go out and say, oh, well, we're making the tax rate go down. Well, it's not potentially our decisions that are making the tax rate go down at the assessment. So that's something to think about, because potentially next year we might have a jump if the assessments really do start to shake down. So that
if assessments went down, tax rates would go up a little bit.
Yeah.
You're right. It works exactly the opposite. That hardly ever happens, but it has happened.
But that's interesting, because the last 2-3 years, I mean, the market's been unbelievably jumpy,
Yes.
and we don't even know where it's going to pan out for next year.
Yes.
So I just think it's an important point, because next year there's a potential.
Yeah. Good to understand, though, rate alone is not the answer.
Councillor Marston.
Just to clarify for those people that might be watching, again, you're talking about the tax rate, which is the internal number that's used to determine the revenue needed and how that's distributed, because it's not the tax increase, percentage increase that a resident would necessarily see. It's a factor.
Yes.
Okay.
Yes.
And again, so it's what residents are most concerned of. What's their tax increase? But that's not the rate that we're talking about here. I think that's important to differentiate those two very distinct things.
Absolutely.
Thank you. Mayor Stewart.
For years they called it the mill rate, partly I think because they needed to differentiate between the tax increase rate, the rate of tax increase, and that useless number that no one else cares about, because the residents don't care about the mill rate, and the tax, we actually don't care about the mill rate.
Yes.
We only care about that. This coming year, will have undoubtedly a significant challenge, because residential assessments have gone up so much that the mill rate for that will have to come down in order to. But we won't see the same kinds of changes on the commercial side necessarily, and as a result, we will see an increase in that ridiculous comparison of mill rate to mill rate, which is of no it doesn't mean anything. It's meaningless.
Yes.
Other than there are a couple of groups that use that as being the proof of something, and therefore confuse the residents out there. The mill rate means absolutely nothing. The rate of tax increase has been coming down,
Yes.
but the mill rate has been doing all kinds of things because it's more dependent entirely on property values than on what we spend.
Absolutely.
Thank you, Marcia.
So a few years back, we came to the conclusion that we needed to reduce the burden for business, that too large of a proportion of our tax revenue was coming from business property class. So we set out to do a few different things. We have our tax shift that we do annually, and we've increased that from 0.75 to 1%. And here's what's happening. So this is a comparison over a 10-year time period that shows you the percentage of the city's whole tax collection that comes from each property class. And you can see that systematically, from 2007 to 2016, for 10 years, it is going down. It's going up for residential, and it is going down for business. You can see we've gone from 38% to 30% in business, and we've gone from 57 to 65. So we are redistributing that tax burden, which is what we set out to do with our tax shift. Now, I have to tell you that there are two parts. There's two reasons why this has such a dramatic effect. One is, of course, our tax shift, because we are deliberately trying to redistribute the tax burden. But the other is because we are growing more in residential than we are in business. Yeah. So it's the two factors that contribute to this. But it's moving in the direction that we intended with our tax shift.
Before we leave that slide, well, this slide is a good example. Practically all your slides show the progression of time from left to right. That one there was the opposite. You started the present and went down to the past. It was a little confusing reading through because you used to. I think several of us had that. So keep it consistent.
Good point. We will note that.
Thank you very much.
Yeah, the two graphs on top of each other, or the x-axis and
yes, exactly. Thank you.
Okay. So this is basically the same information, but instead of showing the proportion of the tax bill.
Before you get going again, Councillor Marston.
On that same piece, we're talking about the distribution of the tax burden.
Thank you.
I think in past you've had some information with regards to a breakdown in terms of valuations, assessed values in each of those. So the businesses are paying 30% of the tax burden.
Yeah.
Do the business classes represent 30% of the assessed values in the city, and conversely, the residents is 65? Do our residential represent 65%?
You know what? I have that information in my annual report, but you know what? I might not have it here. I think it's roughly 60-40.
Roughly 60-40.
60-40?
Yeah, it's not the same proportion.
Exactly.
So 60-40 being 60% of the assessed value is in residential, or is it 60%?
Actually, I think it's 65. Somebody have the annual report there?
It should be in there.
That's last week, so I should put. I think it's about 65%. Okay. Actually, interestingly enough.
Yes.
No, sorry.
I don't think so, yeah.
It's 3070 or 3065 for assessment, but it's only about 15%.
For business.
So
Assessed
businesses,
value,
assessed value represent 15% of our tax base, but they're paying
So it's
30% of the taxes.
Yeah, that would make
Okay,
sense.
thank you.
Yeah. Which is why we're trying to redistribute.
Yeah. Thank you.
Okay? So this is basically the same information, but instead of showing the proportionate, the share of the burden, this shows the absolute tax dollars collected. And so if you add up these 3 points, or these 4 points, that adds up to our $129 million worth of taxes that we collected in 2016. So you can see the increase, like you can see the change in distribution. And so again, part of that is we are redistributing the burden with our shift, but we are also growing more in residential. And so if this continues on in this direction, over time, we should get closer to a 10 or 15% business and a larger percent.
I think we will.
Well, if it continues to grow in this direction, we will.
Business will grow.
Well, actually, the truth is, from a job creation point of view, we want business to grow.
That's what I mean, and it
Exactly.
Right? So,
Councillor Hodge?
I just want to back up to the one slide. You mentioned that business represents 15% of our tax base, but represents 30% of the taxes collected. On the residential side, does that then mean that residential represents
about 80%, 85% or something,
and contributes 65%?
Right.
So it's 80-65 on the residential
which is
side.
why we're trying to redistribute the burden.
But that's important because we've always said to our residents that you are subsidized by business. Essentially,
And that is true.
And that is true.
That
and
is true.
And it's an 80-65 is what
Right.
the subsidy is.
Just to be clear, though, there is not a community in BC that doesn't look like that.
Okay.
All communities in BC, we're not lined up that, if your proportion of the assessment is 10 or 15%, you're only taking 10 or 15% of the burden for business. It's all that way.
Mr. Dumont?
Yeah, everywhere is different, but when I started in Vancouver, residential contributed about 40% and business contributed 60%. We were trying to reverse it to 60-40 the other way, so
Yeah.
Good luck.
it's quite different from community to community, but this is not unusual.
Yeah, we're actually not as bad as most, and we're going in the right direction.
Thank you. Councillor Reid?
So all the years, I knew you could never distinguish between classes in the residential, but I didn't think you could either in the commercial. I thought there had to be like a business rate, even though we break it down for ourselves, but when it comes out. So I'm really interested in any calculations you can do. I'd like to see what they look like if we took our 1% flip and allocated it differently within in-house, sort of, just to see what it would look like. It would be interesting to me.
Okay, we can come back with that.
Thank you. You may
In
continue.
multiple levers.
Any questions? Any more questions?
The share of commercial.
Oh, actually, I did promise at the beginning, Mayor wasn't here.
Actually, I think you.
I did promise at the beginning that I would share the Mayor's conclusions on his article. I brought this up that really maybe you should have been giving this presentation because you're published and you know all about this. But he had some pretty interesting conclusions that were, first off, right on, and second off, a little bit humorous. So his principles were, increases in property values don't result in increases in revenue for the city. Correct? We just talked about that. Property values don't tell cities how much tax they're going to bring in. It only determines how it's going to be distributed. If your property rises more than the average, taxes will rise more than the budget increase. And if number 3 applies to you, there's a good chance you'll blame the mayor. And sometimes it pays to be below average. I thought that was quite funny. Anyway, we were very impressed when we read this article that you wrote. It's excellent.
How did you do that?
This was requested. Brenda requested this to actually adapt a blog that I did a year ago, and I gave it to her in the spring, I think, or something.
Yeah, it's the summer issue, 2016.
Can you circulate a copy of
Yes.
Or even the text.
We can certainly do it. We'll make a copy of it and send it around if you want. It's excellent. It's very well done.
I think I distributed to council an original version of that 3 years ago or something. Because
Get it again. Great.
Predates some of us.
Now, Ms. McLeod, the questions normally suggest that you finish your presentation. However, in my booklet, questions is on page 8, and you've actually got a page 9 with another graph on it.
Yes.
Is there some more?
No.
Okay, nothing more. Okay, that's it then. Mr. Clerk.
All right. Next item, item 4, is again a report of the General Manager of Financial Services. This one relates to the investment policy update and the staff recommendations that Council approve the updated City of Coquitlam investment policy, which suggests that if the committee supports it, it will go on to a regular Council meeting for ratification there.
Are you going to make a presentation?
Nope, no presentation. This is largely housekeeping. Council may remember that we came back with our investment policy about a year and a half to 2 years ago, I think, and we talked to you about opening up our policy and allowing us to invest in credit unions, which we have done. But remember, at the time we said we were going to give it a try, have a go and see what happened, and then we'd come back to you once we'd had some experience. And we have again found ourselves overstepping our policy. I don't know if you remember this, but we talked about really we were going to go and invest where we could get the best return. And if we happened to be a little outside our policy, we were choosing to use it as guidelines, and our process around that would be to go and talk to Pete and make sure he was in agreement. And we're finding ourselves a little offside our policy again because we're investing more and more in credit unions, so we want to remove the cap. But to ensure that we still have a diversified portfolio, we've also decreased the percentage that we could have in any one kind of fund. Okay. So it's pretty much housekeeping, but it allows us a bit more flexibility to go after those better rates.
And mitigating your risk.
Councillor Marston has a question, but before we get to that, I just have one really quick clarification here. On page 2, the second bullet, it reads that the policy has been revised to ensure that the city continues to receive the best rate. We are adjusting the Dominion Bond Rating Service rating on major Canadian banks. So I'm not sure if I understand that correctly. So you're saying you're looking at the Dominion Bond Rating Service rating,
yep,
and you're saying we don't believe that rating, we're going to rate it differently?
No, we're just choosing to, instead of having to have a AAA, we're going to have an A high, an A low, so that we can get some other institutions that we see are having good rates, but they're also...
What do you mean by adjusting the...
Well, our policy sets out that we can only invest in certain things that get these particular ratings, and so we've dropped that requirement a little bit. We're still getting...
We're adjusting our policy about
yes.
how we look at this. We're not actually adjusting the rate.
Oh, yes.
We're adjusting our policy
You're
for the
right.
rate. Okay, thank you.
We're changing the minimum.
The minimum,
Okay.
yeah, the requirement.
All right, so
yes,
you can see why I might be confused.
I get that, yes.
Thank you. Councillor Marston.
Okay, so I think these are good moves. These are appropriate. I've been asking for some time to take a look at how we're employing the policies that we've got available to us to see a greater return. I was happy to hear that some of the things we're seeing this year is we're seeing on the investment portfolio a marked increase in terms of returns by looking at more investment with the credit unions, who typically do get a little more aggressive and sharpen their pencils. That said, there has been some discussion, and obviously, for those that don't know, the credit unions in BC do enjoy both their credit union deposit insurance. In addition to that, the provincial government does back them in the event of default. They're backing the provincial government backs the deposits. That's something that the banks don't typically have, but the credit unions do enjoy. So that said, there's one major credit union is currently petitioning or seeking a referendum with their membership to go federal, and with that, they would become really, I believe, the first federally regulated credit union in the country. That's new legislation that's changed. But in doing that, while there's a lot of upside and good things to that move for them, one of the potential downsides is that they would have to forego that provincial insurance. So their members, in terms of deposits, would be reliant on the credit union deposit insurance.
Yep.
Again, similar to what the CDIC has with the banks. But is there any concern in your mind with regards that if that does happen, would we revisit and say that, you know what, we're really comfortable with the credit unions because it has that added level of security? They don't necessarily have the bond ratings that the banks may have or whatever, but they've got that added level of security. Would you see a need to bring this back to us and say, you know what, maybe only if it's provincially regulated with this, or would you think that we could do that at this point?
I think, every investment decision that we make individually, and we've tried to create our policy to be more like guidelines and be quite open with you about how we deal with this, because we want to put thought into every investment. And I think if they are successful in doing that, of course we'd be aware and we would be concerned that they don't have the insurance, but then neither do the big banks. So we would be looking at the bond rating services or the deposit rating services to tell us, are they a good risk or not? And if there was no greater return from going there, why would we take any risk? So we look at each one individually. And so we will bring back our policy when we feel we need to tell you that we're doing something different than what we've told you. However, we have already told you that we really do treat this as a guideline. And when we find ourselves in a position where we've boxed ourselves in or something, or we've got too much in one place and we're giving up a big return, when we feel that there's no risk, we go to Pete. And if Gary and I, or it'll be in the future, it'll be Rhonda and whoever, if they go to Pete and justify their position, we can be a little bit offside, because it's very hard for us to give up a better rate. Like, we just don't like doing that.
And
but
I
we consider all
that.
those things.
And I appreciate that. I think, as I said, I just want to make sure that we're ensuring that, yes, we want the rate, but we're comfortable with a certain risk profile, and we're going to maintain that. And so what I'm hearing is that in the event you see this change to federal impacting the risk profile, then you'll revisit what we do.
Yeah.
Okay?
Yeah.
I'm comfortable with that. Thank you very
much. And we
much.
rely on the rating services to help us with that.
Thanks.
Councillor Zerillo and Councillor Reid have questions as well. Councillor Zerillo.
Well, I just wanted to say that I'm glad to hear that we're having success with the credit unions, and I thank Councillor Marsden for that, because I know that was one of his suggestions coming in. I guess my concern is on bullet 2. I'm just wondering, there's a reason why things are AAA rated and why they're A rated, and although, I want finance to have the flexibility they need, I am surprised to see this, because I think we've been fairly conservative. So that's the only one I'm a little bit uncertain about, because I understand we do want to take advantage of the highest rates, but there is a reason why somebody is rated A and somebody is rated AAA.
We're sticking with A. It's just not A high, like AAA. So, you know what? Currently, we have no investments with these parties, and we look at them all very closely, and you probably know that we're extremely risk averse.
That's why I was surprised to see this, because
well, maybe sometimes we're a little too risk averse that we don't get as good a return. So we're trying to balance those things.
But I think the city's got a good investment policy. They've got lots of money in the bank. We have lots of money in different reserves. So I am nervous about doing this. I'm worried that we're overplaying our hand, I guess, is what I'm thinking if we do that, if we drop that. So that was just my thoughts. But congratulations on the other stuff, and I think that's great.
Thank you. Councillor Reid.
Thank you. It's been a long time since we could get to the point where we can do a lot of business with the credit unions, and I, of course, like that in the last few years. My question to you is, traditionally in other places, the credit unions are really good for short-term investments, but not quite as competitive for long-term. Have you found that? Or we haven't really had that much time to...
we're pretty new at this, so Gary might want to say something about that. Yeah.
Needs a microphone.
You're quite right, May. That's tended to be the practice, but credit unions are now are changing the way they operate a lot, and that's part of what Coast Capital, is doing. They decided that they don't want to be a regional credit union anymore. Just to follow up on the previous, and I'm sitting here waving my hand. We don't have Coast Capital right now, so we have nothing with Coast Capital.
Okay.
So that doesn't really affect us, and because they're still allowed within our policy doesn't necessarily mean that we have to invest, and we wouldn't. We look at every institution. We're allowed to invest with a lot more people we do, but we make a conscious decision, and we can easily make a conscious decision not to invest with them without changing policy. So I just wanted to clarify that.
We don't have any long-term investments that
Nothing with Coast Capital.
Nothing in Coast
We don't have any investments with Coast Capital right now.
Yeah, and so we have do we have long-term credit union investment?
Yes.
Our longest investments are 5 years right now.
Okay.
And they could be banks or credit unions. Credit unions operate on the basis of having certain time frames in terms of their funds. So we can very often get very good rates for a specific time period, but not necessarily competitive for other time periods. Banks tend to be similar regardless of the time period. Their rates are all pretty steady. With credit unions, they have particular holes to fill or places that they're looking for money. So we'll very often, and we try to pick those, we try to cherry pick those best rates.
Yeah.
So we see quite a difference. Sometimes they're very competitive, sometimes they're not so. So we kind of pick our spots and do the best we can.
I was just interested in the long versus short. Thank you.
Thank you. Are there any other questions? Councillor Zerillo?
So are we voting on accepting both bullets?
Yeah, we are.
Is there a way to have them separated? Because it's not in the recommendation to separate or anything.
The recommendation is to accept the policy. If you would like, you'd need to suggest an amendment to the policy that would go outside of this recommendation.
Can we do that on the fly, or would we send it back?
It depends on the nature. You can do it on the fly if staff feel that they can navigate. If staff feel there's nuance and they need to perfect some wording, then mostly it's better to refer it back.
So what do you have in mind, Councillor Zerillo?
Well, I'm comfortable with bullet one. I'm reservations about the A rating, especially with the election coming in. I see Gary, just with the election coming, and with I have some reservations and trust issues with what's happening in the financial markets. And
so you want to propose an amendment?
Yeah.
So can you?
But I'd love to hear from Gary first.
Okay.
If it's possible.
Yeah. Again, I'm sitting here waving my hand.
I'm sorry, I'm not seeing it.
This is a very minor change that we're proposing here. When we're talking about banks are rated anywhere from here to here. Yeah. We're only dealing with the very top portion. What we're suggesting is maybe going from here to here. Right now, there's only two banks that would be included that currently aren't. That's the Laurentian Bank and the Canadian Western Bank. Those are the only two institutions that would be included in the new policy that aren't included in our present policy. Both those banks are very strong. There's really no risk whatsoever. I shouldn't say, there's always some risk, but the risk is very limited. Canadian Western Bank, typically, their rates are very good compared to other banks. So we're really giving up very little by coming down one small notch out of maybe 40 notches. Okay. So it's not like we're going right down. We are very concerned about the safety of our citizens' money, and that's paramount.
Okay.
I'm happy with that. Thank you, Gary.
Thank you, Gary. Thanks, Councillor Zerillo. Councillor Marsden, did you still want
I think Mr. Jackson has said it quite well, but just as a point for everybody, the Canadian Western Bank and Laurentian, which are the two that would be opened up by this, certainly in terms of size and financial stability would rate incredibly favorably against a lot of the credit unions we've got open to us. So again, given the comments that have been made with regards to this is something we're able to do, and then we look in determining where we invest, I'm certainly comfortable there. I think this makes good sense as presented. So again, thanks. Good work.
Thank you. I'll entertain a motion to approve.
So moved. Second.
Moved by Councillor Marsden, second by Councillor Asmundson. And before we have the vote, Mayor Stewart?
Very quickly, it's council's job to set the level of risk, to let staff know how comfortable we are at various levels of risk. But really, we really ought to be looking to the professionals to develop the policy associated with that risk. I concur with the elements associated with credit unions, for example. If Van City went down, there would be nothing left for a failure of Coast Capital. There's in the provincial system, because it's completely different from the federal system. But that's something for the bond rating agencies who are experts at that, and our consultants and our staff to advise us on as to how to keep our risk within the risk level that council is comfortable with, and so I'll support this. Thanks.
Thank you. Any further discussion? All in favor? Opposed? Passes unanimously. Mr. Clerk?
Next item 5, pertains to citizen budget update. Staff recommendation is that council approve the continued use of citizen budget, an online citizen engagement tool to capture public budget input.
So moved.
Second.
Moved by Councillor Zerillo, seconded by Councillor Asmundson. Any discussion? All in favor? Opposed? Carried unanimously.
Item 6 pertains to the Land Sale Reserve Fund policy. Staff recommendations that council approve the amended City of Coquitlam Land Sale Reserve Fund policy.
So moved.
Second.
Moved by Councillor Marsden, seconded by Councillor Hodge. Any discussion?
You'll hear you heard it before, so I'll.
Yeah.
I'll call vote. I'll move deferral until council is complete, because we know where this will go if we don't do that.
Pardon?
I'll just ask for us to defer this until all of council members are here. Our last item, we had that same issue last time, and either that or if council wants to agree that council's wish, as expressed by the last vote, should be repeated today. Otherwise, we'll end up with a 4-4, and I'll be bringing it back later.
So we've had a question of deferral here, and normally when somebody asks for deferral, we say yes. Let's go ahead.
It's a motion. It's a separate motion, and
Yes.
a vote would be
I know.
required.
So second for deferral.
Second.
And the second, Councillor Marsden seconded the mayor's motion.
I'll
I'm
second.
sorry. What did you say?
I second.
Hodge. I'm sorry. Councillor Hodge. Any discussion on deferral?
Let's go 4-4, bring it back.
Yes, Councillor Zarilla.
Have discussion on umbrella. I don't think we should presume the vote. I
can't hear you.
I don't know if we should be presumptive that the vote is going to go one way or the other. I thought we were.
We were just talking about risk aversion. I think the mayor's practicing it here in a different context. But anyway.
Anyway, okay, I'll go with the deferral, but I'm wondering.
Point of clarification, this is the last item on this agenda, so deferral would not be...
No, it's not.
One more? Okay. Okay, so in the event we were not able to address it...
Yes, Mr. Clerk.
Yeah. What I would suggest, and again, I'll use a little bit of what the mayor suggested, a little bit of administrative convenience. What I would suggest is that we recess this meeting in order to get it approved today so that it appears on the same set of minutes and goes to the same council meeting. Just, again, for administrative convenience, it wouldn't make sense to recall the meeting just...
Perfect. Okay, thank you very much.
Thank you. Then the vote on the motion to defer. All in favor? Opposed? Carried with Councillor Reid and Councillor Zarilla opposed.
Item 7 pertains to reserve fund capping. Staff recommendations that council approve the reserve fund caps recommended in the report before.
Recommendation.
Move recommendation.
Councillor Reid moves it. Councillor Marsden seconds it. Any discussion? Councillor Hodge.
So just one item on the building preventative maintenance reserve here. It says down here, surplus for the preventive maintenance. It says the related capital building reserve for component replacement for such items as roofs and boilers is significantly underfunded. This is what we talked about previously, and that's coming forward in the budget. Okay.
There's two parts to this. One is there is a net zero request in your budget package to transfer some money from building replacement to component replacement, because we know component replacement is underfunded. But also related is our normal preventative maintenance, which is an operating account. And there's a little bit of extra money in the, sort of the pool of funds there. Instead of just putting into the infrastructure reserve, we'd like to put it into component replacement because we know that's underfunded. It's all related to taking care of our buildings.
Right. Okay. On the insurance, we're self-insuring right now. But in here, it does the report makes reference to the fact that we're really not protected against a big catastrophic event, or we should be putting more aside if we're going to self-insure.
But we do have umbrella insurance for very large amounts.
That was my question, is that we're really basically underwriting ourselves.
Yes.
So would it, instead of putting more money into the insurance reserve, would it be better just to reduce the deductible or change the deductible on it so that we don't have to put as much money for self-insuring, we just lower the threshold at which the umbrella policy kicks in?
We could look at that. What we were proposing here is, because it's very difficult to know just how much should you have aside, we were looking at getting an actuary that is in that kind of business to help us with that. So that's the recommendation, to do a little bit more work and then come back to you if they recommend a particular sort of magnitude of reserve, then we would set that in policy at that time or create
So that's
that.
one of the things the consultant would look at.
Yes.
Because to me, it looks like we're tying up all of our money on the off chance we may need it. I'd rather pay a little bit more in premium to reduce the deductible as opposed to tying up capital. I'm recognizing that we're investing that, but rates of investment are very low, especially if we're risk averse. And to me, it makes more sense not to tie up capital, but rather lower the deductible.
I think the challenge there is we made the decision to go to self-insurance a couple of years ago, and when we did the analysis of as soon as you lower that amount that you're covered, the price goes
Starts to
way
go back
up.
as if you were
And so
insured.
we were paying premiums that really we could demonstrate we weren't getting much of a return, and so we would be better to self-insure up to a much higher level, and that's how we got here. Now time has moved on. We've collected a bunch of money because we're paying less of an insurance premium, and now we want to know, okay, what is that limit? And so we need to do a little bit more work, and that's the direction we're looking for from you.
Okay.
So I have a question. The recommendation is that Council approve the reserve fund caps recommended in the report. However, the report deals with more than just capping things. It also contains policies such as staff recommends that any surplus from the maintenance fund be transferred to the building component replacement fund. So that's not a cap.
If you cap it and we're over the cap, where would we put that money?
I know that, but according to the recommendation, it's just that we approve the caps and not the resultant use of the money after the cap's over. So I would entertain an amendment that said that Council approve the reserve fund caps and associated measures recommended in the report.
Good change.
I would entertain such a motion.
I would make that motion.
Seconded.
Councillor Marsden.
Yeah.
Councillor Reid seconds. Any discussion on that? All in favor?
Thank you.
Opposed? That's carried. Thank you very much for that amendment. And now we're still discussing that amended motion.
Oh.
Okay. Any other further discussion on the amended motion? Okay. And it was moved and seconded. So all in favor of the amended motion? Opposed? Carried unanimously. I move now that this meeting be recessed.
Sorry.
Excuse me, I had a question.
Oh, I'm sorry. I'm sorry. I missed that. Should we wind the clock back a bit?
Well, it's actually, it can be just a general question after the fact.
Okay.
You say that it would be prudent to do an actuarial evaluation to discern. Do we hire an outside person
Yes,
to
we
come
hire a
and do
person
that?
who's a specialist in insurance kinds of things to help us with that.
Yeah, okay. And he or she is someone who does it for the industry?
Yes, somebody who knows an awful lot more about this than we do. And we probably would do an RFP for that service.
And they give us where they think we're safest?
Yes, where should we be?
Yeah, okay, thank you. Gary, no?
And Councillor Asmussen, so after the fact, the question, I'm sorry about missing you.
Comments.
Having worked in the industry.
I like the report, and I think it's proven that most of our reserves are adequate to where they're at, and some of the caps aren't met in that range, some very GLDs. The one question I did was answered is that the move in the building replacement, building maintenance, preventive maintenance to component replacement is only a temporary until we do a study on the component replacement and get a more detailed report to look at. Because we had I think we were looking last year between $2 to $3 million potential underfunding in that
Yep.
form. So this is one way to step some money into that gap.
This is helping.
To help that gap a bit. And the idea of taking out the building preventative maintenance fund is that if we put more into components, we're extending the life of the building, so that effect on our building maintenance will be mitigated in that.
Absolutely.
Okay. I'm fine with that. I'm going to be interested to see that report when we get that back, sort of like we just had with parks and their funding of amenities. Okay.
Okay, thank you. Then this meeting is recessed.
Thank you, Mr. Chair.
And Mr. Clerk, how long?
Can you give us about 5 to 10 we need to get